Boy, that time just flies right by, doesn't it? Boy, it feels great to be back here with you guys and gals here tonight. Hope you guys had a great weekend, but it's time to get back to work. Get those feet up off the desk, close out those emails. It's time to get ready for tomorrow's trading session. It's Monday. It's a brand new week. It's a brand new month of trading opportunities. And of course, as always, Monday evening, November the 4th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, don't forget, guys, I help traders find high-quality setups using a very simple three-step trading strategy that we trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is to help you guys find the best levels of support and resistance, structure the best entries and exit setups for tomorrow, and most importantly, how to avoid some of those easy rookie mistakes so we can keep all that money growing in our trade account. And this will be the plan for tomorrow. That's Tuesday's trading session. And we're going to a lot to cover here tonight. We'll grab some charts here. We get some oil, some S&P, some Nasdaq, and some gold. We'll grab the calendar here for this week. It's the second week of the month, which is normally a pretty quiet week as far as economic news. But we got a bunch of news tomorrow that I want to make sure you know about, whether you're overnight or with us in the U.S. session tomorrow. But tonight, though, first of all, let's jump into that oil, that black gold. Remember that half back that we talked about a couple weeks ago? Well, they got that half back, right? And boy, oh boy, did they take some profit off that half back. Big pullback on oil right now. Is this the buying opportunity these buyers have been waiting for? Or is this the beginning of the end for this bull run on the crude oil? Let's not talk about it. Let's draw it up here and let's take a look at what this chart looks like here on oil. Now, of course, the most important thing we have right now on oil is the market goes running up and then gives you this beautiful, really strong pull back. Market's been bullish here on oil for a while, right? It's been bullish on oil here, boy, since middle of last week, right? That big meteoric rise coming out of Friday's big non-farm payroll blowout. And then, of course, continuing here right up to that halfback at 63 and a quarter. Now, we'll talk more about the halfback and kind of where I got that from in more detail tonight on this video. But the most important thing is you can easily see those buyers clearly took their profit. And now we're getting this run up and this nice pullback here. Now, it's a bull market at this point. We definitely can't call this a bear market. So knowing it's a bull market, what do we want to do? We want to buy at support. I've got tons of support stacked up here. We'll go into details more on that tonight on the video. So I definitely want to be a buyer down here. I definitely want to be a buyer, but there's one big concern. Can you see it? It really is a big concern of mine. There's one big concern on this chart right now. If you can't see it, we're going to go into a lot more detail because the big concern tells me tonight, it really tells me what type of entry pattern I want to use to get long on this oil. I'm gonna hold out on this a little bit longer. We'll talk about that big issue I see, and we'll also talk about how to be a buyer. But what if these bears can hold? Where are they trying to go down there? Where's our next targets? I want to be a buyer here on crude oil. I've got one big concern though about this pullback, and tonight we're going to talk about why that's important, how we're going to apply it, and the best entry setups, both long and short, for this black gold, this Texas tea, those crude oil futures. Over on the S&P tonight, don't forget S&P also has a big bull run up. Unlike oil, though, we're not getting that nice clean pullback. You'll notice 1, 2, 3 legs back. That is what I call the rule of threes. What do we know about this right now? We know the market's bullish, and I'm sure a lot of you can see it's a flag, right? It's a flag. Now, flag patterns are probably one of the most difficult patterns to trade, but there are two very simple setups that you want to be looking for. One is down off of this trend line. I think this trend line, and we'll talk more details on this tonight in the video, but this trend line, I have a funny feeling they are trying to pull back to get in somewhere off that trend line. That is an area that I'm absolutely interested in buying tomorrow. And then also, too, I would love to use the top of this channel. So I've got this trend line coming down. I've really got two trend lines we're watching right now. We know we're bullish. And so we definitely want to be a buyer on this market, that's for sure. I don't want to be a seller just yet, even though we are getting lower lows and lower highs. It's a bull flag. Historically, typically there are two places to buy a bull flag. One is underneath the channel, the other is above the channel. Now, I'm going to go into a lot more detail tonight about the specific entry pattern you want to get underneath the channel, but then more importantly, is the breakout pullback. There's a lot of wrong ways to trade a breakout pullback off of a flag, and I want to make sure I go over those, the wrong ways to do it, so you know what to look for the right way to do it. Now, you might be disagreeing with me on this. You might think, no way, Joe, we're going back to fill that gap. Okay, all right, but how do we get through this support trend line? That's the challenge, right? How do we sell this market? I've got some really good ideas for you to consider to be a seller here on the S&P as well. We're going to cover the good, the bad, the ugly, the long side, the short side. We're going to cover all those details tonight on this video. How about some Nasdaq? Nasdaq is another slightly different look, right? We had the oil jump up, sharp pullback. Boy, Nasdaq is pinned right to its highs right now. Big, strong run up. And you know, oil got that deep pullback, right? We're trying to be a buyer on oil right now. Well, there ain't no pullback right now happening on the Nasdaq, right? Every time the buyers take their profit, what's happening? They're getting bought right back up. So the market just, you know, almost like a cage fighter, right? Pinning the other component, right? The other opponent into the corner. You can see these bears, right? The bears are they're pinned back right now, right? The buyers are holding them right up against those highs. You can definitely tell they don't want to buy high up here, right? That measured move is right overhead. But boy, oh boy, I'll tell you can easily see every time it pokes its head below that range, it gets bought right back up. We know the market's bullish. We know the market is range bound here. What does a range bound market tell us? Buy low, sell high, and avoid the middle. We know the market's very bullish though. I want to be a buyer, and I've got a bunch of opportunities here underneath. I want to buy at support, right? I've got a great trend line. I'd love to buy off that support. I've also got this hidden channel you might notice, and that might just be where we get our best entry for tomorrow. But I'll tell you right now, I'm going to warn you right now, I will not be able to use the same entry pattern as a shallow pullback as if we get a deeper pullback tomorrow, later in the morning tomorrow, I should say, right? I cannot use the same entry patterns. I can be a lot more aggressive with an earlier, shallower pullback, but I've got to be a lot more conservative on that deep pullback. And we'll talk about those. We'll talk about the two types of patterns you can look to buy off of it. I'll also talk about what the plan is if the market goes higher. You know, what if we keep this party going higher here? Who knows? We get some big news tomorrow morning. It could easily get this thing going to another leg higher. So we'll talk about what a breakout looks like, and also, too, how to fade those breakouts. Could you go up and sell this thing back down again? Absolutely. And we'll talk about all the patterns that we like to use on range environments here on the Nasdaq. Definitely stick around for this video on the Nasdaq tonight. How about that gold? Boy, yellow metal. Now, I'll tell you, we talked about the yellow metal today in our trade room. With everything running higher, oil running higher, right? S&P, Nasdaq running higher, gold's just cool as a cucumber right now. Very interesting. You would think that gold would be a disaster today, right? You would have thought that, you know, that fear-based market, shelter market, while they're partying on the S&P and the Nasdaq, you would think it would be a funeral, right, on the gold, but it's not. And what does that tell you? That's a really bullish clue here for the gold. We definitely know the market is overall bullish. We definitely know we're inside of a range. What does a range tell us? It tells me to buy low, buy low, buy low, sell high, sell high, sell high, buy low, sell high, and what? Avoid the middle. So what I want to do is, knowing that we have a lot of bullishness in this market right now, I'm really looking to capitalize on this expanding triangle. You'll notice, right, we've got that expanding triangle here. I think we have a ton of upside potential here on the gold. But what's the one thing you don't want to do on any range-bound market? You don't want to do nothing in the middle, right? The middle is always going to be a disaster waiting to happen. I've got my eyes on this area right down here for a crown reversal pattern. We're going to talk about a crown reversal. I can see a couple crown reversals in the past here. We'll point those out as we go. A crown reversal is exactly what we need to avoid trading in the middle, right, and try to capitalize on this move going higher. I'm going to talk about the crown reversal. We'll talk about what to do if the market sits inside this range again, and what if it just jumps, right? What if we don't get the pullback? I'm going to give you two patterns to look for as we try to finish off that pendulum swing and that rotation back up to the opposite side. So boy, a very, very exciting chart to talk about on that gold. Why didn't gold drop today? Why didn't gold drop today? Might just be the biggest clue we have on all of these markets right now. We're going to dive into all of this tonight and get you guys ready for tomorrow morning's session. Before we do that, though, I just want to remind you guys to make sure you join our mailing list. Don't forget, join the mailing list and you'll never miss another great video newsletter. All I need is your name, your email address. Hit that subscribe now button. And don't forget, when you subscribe to join our mailing list, I'm going to send you a welcome email with a very important verification link in there. You've got to go in, find that welcome email, verify I have the right email inbox. That way I can keep sending you emails every step of the way. And don't forget, sometimes that welcome email gets stuck in your spam filter. So if you don't see it in your inbox, check your spam or give me a holler here in the office and I'll help you out with more information from there. Also, don't forget, how about some questions, comments, concerns? That's what the comment section's for. Drop me a question in the comment section below the YouTube video or here on the blog at Sideways Markets, and I'd be happy to answer any questions you may have about the strategy, the levels, the entries, the exits. Any questions you may have, right? Definitely post those questions down in the comment section below. Or how about some feedback? You know, I got some thick skin. I'm always trying to get better at this. How can I make this video the very best for you? What's the most important thing that I can talk about in this video? What do I cover that you love? What do you wish I would talk about in this video? How can I tailor this video to get you mentally, technically, and of course psychologically ready for tomorrow's trading session? So drop me some comments, leave me some questions if you got any questions, and how about some feedback? How can I optimize this video to really be a great resource for you? I want to hear from you down in the comment section below. And by the way, while you're down in the comment section below, do me a favor, please. Hit that thumbs up button for me, because believe it or not, every time you hit that thumbs up button, YouTube helps to expose this video to other traders who are dying to learn how to use this strategy to find reliable, consistent setups as well. So while you're down in the comment section, hit that thumbs up button. Don't be afraid to subscribe to our YouTube channel. That way you never miss a great video. And also don't forget too, we talk about putting those questions in below, but if you have any questions and you want to call me in the office, I'm always here, right? I'm a pretty nice guy, right? I'm a pretty nice guy. You don't have to worry about me. Call that toll-free phone number anytime you have any questions. Like, for example, we get a lot of questions about how to get access to our trade room on a free pass, or how to register for your free trading classes, or maybe you want to know more about those one-on-one setup calls that we include as a bonus with our membership. Call that toll-free phone number. I'll be more than happy to go over all the details, answer any of the questions that you may have. It's always better for me to give you the answers right away. That way you're not to search all over the website or go to Google or YouTube or whatever. Have any questions? Call that toll-free phone number in the upper right-hand corner. But enough of this already, right? Let's get this video going here. You guys didn't come for me to talk about the toll-free phone number. We came here to get ready for tomorrow. Tomorrow, of course, is Tuesday. It is November the 5th. It is listed as Election Day in some parts of the United States. I believe tomorrow is also the beginning of the UK election season. They get that special election coming for Brexit. I'm sure everybody in the UK is pretty darn sick and tired of hearing that acronym Brexit right about now, right? Probably the same thing here in the US as we are sick and tired of hearing about trade and China. But we know, though, we are in the kind of the last few stages there. If you're in Europe, I can certainly empathize with the pain in the butt of this Brexit stuff. Election season starts tomorrow, so of course the European session will likely be filled with reaction to politicians. The big news for tomorrow, now as I said in the introduction, this is the second week of the month, but something interesting here, because last Friday was the non-farm payroll report, usually what happens is we get a key manufacturing number before that non-farm payrolls. Usually non-farm payrolls is the first Friday of the month. It's just very rare for that first day of the month to be a Friday. So you may not be aware of this, but this is a very rare occasion where we got the jobs report last Friday before we get this ISM manufacturing and that JOLTS. This usually comes a couple days before the jobs report. I won't bore you with the details, but as somebody who's watched this for many, many years, this means that tomorrow's ISM non-manufacturing really is the big news of the session. We saw a big let's not go too far here. Let's not say blockbuster. We saw a surprisingly optimistic jobs report last Friday. It wasn't a barn burner by any means, right? It wasn't something you would write to grandma about, but it was definitely it was optimistic, especially after we had seen some things pull back, right? Manufacturing had pulled back in the last couple months. So a very optimistic U.S. market, and we saw, right, the last couple days, Friday and Monday, the markets came roaring back to life. Combine that with some optimism, right, from the U.S.-China trade talks, and of course, right, the recent IPO announcement for Saudi Aramco, right? They must have some very a positive view on the overall global economic climate if they're scheduling, right, those headlines we saw in the Middle East, right? The Saudi Aramco IPO has now been put on the books for December. So everything does point to be a bit of a rosy picture right now. And I would expect that ISM non-manufacturing index tomorrow morning at 10 o'clock Eastern time to be the big meat and potatoes, right, on the plate for tomorrow. Now, if you're in Asia, or if you're in Europe, right, Asia or Europe, I'm not sure exactly what time overnight, but we will be hearing from China's President Xi, right, the kind of counterpart to this trade deal, right? You got President Trump in the U.S., you got Premier Xi or President Xi, right, in China. President Xi will be talking, right, or has some speech announced, right, for overnight in Asia. Now, usually that is sometime around 3 a.m., 4 a.m. Eastern time. It'll be usually just before they open up in Europe. The reason why that is so important is because obviously we've got this, bickering back and forth to the U.S. and China trying to get this phase one trade deal signed sometime before the end of the year. What will the president say tomorrow? What will China's Xi say tomorrow? Will he say very positive things, right? Will they all hold hands and sing Kumbaya? Or will they do what has been customary and jab the other player? I'm honestly hoping that we get some jabs, because that's going to give us some pullbacks to work with, and pullbacks means catching rookies, right, and running it right back up to retest the high. Bottom line is, right now, that is a known unknown. We don't know exactly when he'll be speaking tomorrow. It'll likely be just before they open up in Europe, right? So 3 o'clock, 4 o'clock Eastern time. And I'd be lying to you if I said I know what he's going to say. I have no idea what he's going to say. Will be positive or negative, but we do know that there's a likelihood of moving these markets overnight, either another leg higher, right, or possibly a nice deep pullback. So tomorrow, don't underestimate tomorrow. We got overnight, we got China's Xi with his speech overnight. How will he address the markets, the trade deal? Then, of course, we got that ISM manufacturing index, or non-manufacturing, at 10 o'clock Eastern time. That is going to be some big headlines for tomorrow. And hopefully that will give us some nice volatility and some nice setups tomorrow morning in our trade room. Let's jump into our charts here now. I got some oil, S&P, Nasdaq, and gold. Let's kick off here tonight with the black gold, the Texas tea. What do we know about this oil? We know that, if you recall, back in September, there was they kind of blamed it on Iran, but I don't think we ever knew who actually did it. There was never any, final ruling on that, not that I saw at least, which was the drone strike. Remember that? There was that drone strike, right, in Saudi Arabia. Prices exploded all the way up up to 63.25. And then came all the way back down that week. Well, if you were to mark that big meteoric rise, that big pullback, right? Where's the halfway point? It's right where we are right now, right? That halfway point now is halfway back up to where that big drone strike high was. And again, that drone strike high was like 63, 63.25, right? So we got back up to that halfway point. We kind of messed around there for a while this morning, and then a nice big dump as we go back down in. Profit taking from the buyers, pretty obvious, right? So we know we're bullish here on this oil. We know we want to be a buyer at levels of support. And really, we've got 3, maybe 4 components to find that level of support. The first one is we go up, we pull back, we go up. That is a great level. We call those reversal lines. That is a very enticing area of support on this chart right now. What else do we have right now? If I mark up these highs, bring it down to these lows, you'll notice that is what we call a hidden channel, right? A little negative channel, a reverse channel. That is a level of support. We can also see that support trend line as we go higher here, bounce, right? Draw that trend line off. That is a very tasty area of support as well. And there's one more. If you look at this, we go up, we go back, we go up, we go back, we go up, we go back. If I take that comes a range. Take that trading range, right? Double it up. What do you get? You get those range expansions 1 and 2. That is a major area of support. So we are primed with lots of support on this chart, but there's one big problem, and that is that big leg down, right? I mentioned this in the introduction. I want to be a buyer here, but there is one big concern, and that is a very strong pullback. Now, anytime we see a strong move in one direction, for example, right, strong move up, what do we usually get? We usually get a follow-through leg. Anytime we see a strong move in one direction, even if it's going against the trend, we usually get a follow-through leg. And what that tells me now is even though I want to be a buyer, I need to respect the short-term momentum. So I know I want to be a buyer down here. I don't want anything to do with buying high because I'm going to be buying right into that major level of resistance where we have no idea if it'll be able to successfully go through it. So I don't want to buy high. I want to buy nice and low. The problem is when we get that move going lower, it really picked up steam. There's a big difference between a pullback like this, a pullback like this, and a pullback like that bad boy, right? There's a big difference. Shallow pullbacks you can get pretty aggressive with, but really strong pullbacks, see how they separate away from the moving average? Right? That's always the giveaway. You know, I teach my clients in our video classes, and we do it together in the trade room every day. I teach my clients how to use the moving average because in all reality, it's really, if there's one tool that I would never want to trade without, it would be that EMA, right? That moving average is really the most important thing. Not because it's the signals we get, it's how the market responds to it that tells us what momentum looks like. If we can barely get below the moving average, if we can barely get below it, I know the bulls have full control and I can be very aggressive that way. But if we really get a lot of separation off that moving average, you know those bears, they mean business. Now, I don't think this market's going to reverse on this, but I do need to respect those bears. Here are 2 ways that I'm looking to respect the bears, but at the same time, look and focus on being a buyer. And the first one is I wait for what I call a major to try. Now, a major to try, all that simply means is it means that we're looking for the market to finish off what it came for, right? We know we got that strong move down. We know we're going to probably get another leg in the same direction. Now, at that point, now we know where all the stops are for those sellers. And as long as they don't keep this party going lower here, as long as I can get that, what I call a 2-try failure, 1 and 2, then I know exactly where their stops are And I can now be a buyer right into those stop losses. So one pattern I'm waiting for is, I know I've got this strong move down. I'm waiting for a second leg to go. At that point now we know right where all the stops are. Now we know right where the pain point starts, right? Now we know right where those counter trend sellers, I realize it's a very deep pullback, but it's not a bear market. Now we know where those counter trend sellers are going to get into trouble, and I can buy into those stop losses. In fact, my goal will be to buy with a failure and then also try to get it on a pullback shortly thereafter, right? Buying off a failure and then buying that pullback. I call this a two-try failure pattern into a pullback, right? Into a pullback pattern. Now, a lot of times you can mark up that high, and that'll be your sweet spot on that. All right, we'll talk more details on that inside of our trading classes. Now, what if we don't get that second leg over? The odds are pretty good they're going to get it. So how do we be conservative? How do we respect the bears without giving them that completion? We call a nested, a 1, a 2, and go from there. We know those bears are probably not going to give up without a fight. So if we don't get that 1, 2, right? If we don't get that full 2 and then go, now we look for the next best thing. And these are pretty common. We call these nested failure patterns because it's obviously a failure. It's a pattern inside of a pattern. And this is very, very simple. How many tries do we think those sellers will give before they give up on that pullback? Once? Maybe twice? In my experience, it's twice. And once I see those bears trying twice, then I can make that run, right? Going back up now, right, into that trading range. Now, maybe you're laughing at me right now. Maybe you're saying, man, this guy must have fallen down and hit his head. This thing's going lower. Okay, all right. So how do we sell this thing then? If you think this market's bearish right now, I disagree. I don't think with all this support right here, I think buyers are waiting to get their hands on this to get back up. But how could I sell this? Well, we know we have a strong move down. That will be the first leg of a 1, 2, 3 reversal, wouldn't it? 1, strong move down. 2, pull back to the moving average. 3 now is a strong jump off the moving average. If I can get those sellers, prove it to me, sellers. Really what it is prove to me the buyers aren't strong enough to hold you back. If you can jump off that moving average for me, now we're on the bear side. I'm going to mark up that low. I'm going to draw a new trend line off that low. I'm going to bring it right up to that high and find that negative channel, that reverse channel, that hidden channel as we call them. Maybe we get lucky. Maybe we get really lucky. We can use that trend line as well. I don't know. The trend line is not required. What is required, though, is to get that 1, 2, 3 reversal. Then I can sell off the top of that channel. Now, where's my target down here? Where are they trying to go? 55 is a pretty easy round number. So 55 will be a pretty easy round number, but in all reality, that 54 level, if you look left here, 54 is just a mess as you go back here. 54 is a big time range, if you recall, right from the beginning of October. 54 is where these guys and gals want to go back to in the bigger picture. But again, 55 will make for an easy round number target there for those sellers. So if the bears get their hands on it, look for 55 using that hidden channel pullback. Now, if we go back in and we sit here for a while, right? What's the plan if we go back in and sit? If we sit back inside this range, right? And we sit and we sit and we sit, what's the plan? Well, now it becomes very much a range-bound market. It's got a bull bias to it. I want to mark up that range and then wait to buy it underneath. And it will literally be the same plan. We'll wait for the pullback, wait for the sellers to get caught trying to sell that breakout, and we'll buy into their failures. You got to remember, guys and gals, there are tons, hundreds, thousands of rookie traders out there that are unprepared to trade those pullbacks. They're trading without a plan. They've got no coach. They've got very little discipline. How do I know? Because I was there for a couple of years, right? I spent the first almost 4 years of my career without a plan, without any discipline, right? And without really any knowledge of how the markets work. These are scenarios. And I don't want to sound sinister, but the markets are very simple. They're transferring wealth, transferring capital from knowledgeable trade or into knowledgeable traders' accounts, right? So if you're going out there without a plan, if you're thinking that a couple indicators and a good pattern, right, and a good chat room is all you need, well, I would caution you, please don't blow all your money in one trading session, because there will be professionals like us in our trade room waiting for those pullbacks, waiting for those rookies who won't be able to resist the temptation to try to call that top, waiting to buy right into their failure. All right, so now we know the good, the bad, and the ugly, the buy side, the sell side here. I want to keep going here on crude oil, but I also want to give you a lot more detail about all these patterns we've been talking about here so far. And so if you want to get a deeper dive into all the entry patterns that I love the most, make sure you grab that free course. It's linked in the upper right-hand corner. I'll also put a big red button here for you guys right below the video tonight on the trading blog. So if you're on the blog at Sideways Markets, hit that big red button right below me tonight. If you're only on YouTube right now, there's a link in the description. There's also a link in the upper right-hand corner so you can get registered as a brand new member of our free trading classes. That way, at least you'll learn all the patterns, all the setups, and you'll know what we're talking about here on this video newsletter. In the meantime, let's keep going though. S&P's calling my name here right now. We got that big bull run up on the S&P. And this is as classic of a flag as you can get. Classic flag. We talked about this last week, I believe. How do you know it's a flag? It's slow and really very narrow, right? So do not confuse this with a bear reversal, right? What would a reversal look like? A reversal would go 1, 2, dump, right? When the buyers walk away, the market will collapse. Right, like the floor gets pulled out from underneath them, right? This is nothing more than the buyers getting their big measured move, right? Look back in time here. It's a good idea to get a bigger picture look on this because you kind of see where I'm coming from on this, right? What you can see here is we got that one leg, two leg up, right? They got their measured move. No surprise about there. Notice how I draw this trend line over here too. This trend line is going to be a key component on this as well, right? See that little trend line I drew in there? I had to make an extended line because it wouldn't stick there in Ninja 7 right now. But that will, right? That's where that trend line comes in. The bottom line is they got this big monster move higher, right? Coming out on Friday, one leg up on Friday, two legs up into Monday, and they run right into that buzzsaw. Right? Not as bad as oil, that's for sure. Oil took a big hit, and that's why we got to be careful on oil to buy that pullback. You'll notice in this one, though, we can easily see here, obviously, if you look at this chart, again, they have not collapsed, right? There's no collapsing going on right now. The market is just slowly kind of working its way higher. It went higher. It gapped up, for crying out loud. That's two weekend gaps in a row, by the way, that have not been filled. We talked about the fact that you don't want to assume gaps get filled. We talked about that last week, didn't we, guys and gals? And sure enough, we got two gaps. Right, we get that 63 gap. We also got that gap all the way, where is it? 19 3/4. Remember they missed that gap by 2 ticks last week? Great example of that lesson on gaps we did last week here on the newsletter. Anyways, I digress. What we know right now is we know the market's bullish. And it looks to me like a classic example of the rule of threes. We got 1 pullback, 2 pullback, 3 pullback. Why does it do this? If it's not a bear market, what are they trying to do? They're trying to find a good place to be a buyer, right? The cost of getting into this market skyrocketed before a lot of people ever woke up this morning. Remember, it was daylight savings time switcheroo over the weekend, right? The people in the U.S. right now are hating life. Maybe not today, but probably more and more as we get a little bit closer to Wednesday, right, this week, right? They did it to you guys in Europe last week. We get to get on that roller coaster ride this week here in the U.S. So a lot of people, right, this whole big move happened before the opening bell. I'm sure a lot of folks came into the U.S. session at 9:30 this morning for the S&P at least and said, what the heck, right? Come back and get me in. And so they're buying some here, they're buying some here, they're buying some here. I personally think that they're going to come all the way back to that big trend line I drew in earlier, right? I wouldn't be surprised at all if they run lower and we get that beautiful setup right off of that low. But this is a very, very typical scenario where the market is so strong, so early, that buyers are going, I can't do anything with this. Bring me back a little bit. Give me something I can sink my teeth into. Get me something, 3/4, 80% back. Give me something I can actually use here. That's what this flag pattern tells us. Now, we talked about this last week, but in case you weren't here last week, when it comes to a flag pattern, there are really, and again, slow. 1, 2, 3. It's slow. And it's just really, it feels like the market is disinterested. It feels like it's got better things to do. And that's because nobody wants to buy that high. Most important thing is, we have a flag pattern. You want to try to get that 1, that 2, that 3. Then, here are 2 patterns to look for. 1, 2, 3. One of them is going to be a failure underneath. We'll look for that move lower. The moving average will come down, and we'll look for a seller, basically a seller breakout pullback, right? This is not a bad pattern for the bears. It's just way too bullish to take that trade. That breakout pullback underneath the channel, that failure of that breakout pullback. Again, like I said earlier, there are lots of traders out there that will not have the discipline to resist these low probability trades. I'm not saying that trade can't work. Remember, one of the things we talk about is what's more important, getting a winning trade today or taking trades that over a long period of time will give you a winning probability. Right? There's a big difference there. Yes, that pattern may work 1 out of 10, 2 out of 10 times, but if you take every single one of them, the majority of them will fail, right? That failure is a highly probable pattern for the buyers, not for the sellers. Okay, that's the first way to do it. And we got that trend line coming up here, right? That seems to be the best setup we can get to buy nice and low here, right, on this S&P. Another opportunity here would be we go up. Now, this is where things get tricky. You want to make sure you get a trap high. That trap is important because when you get that trap, remember trap pattern is, and you'll learn about traps in that free course in the upper right-hand corner I keep mentioning, right? That trap high has sellers trying to sell. Remember, what is very tricky about a flag is to most rookie traders, right? It took me a long time to learn these tricks because flags, they look like they're bear markets, right? You got lower lows, isn't this a definition of a bear market? Right? Lower lows, lower highs, moving average slopes down. Isn't this is the definition. If you were to open up day trading for dummies, Forex for dummies, futures for, beginners, right? First thing you talk about is finding the trend. Lower lows, lower highs. A lot of people are going to try to sell that pullback. But is it a bear market? No. And again, which is better? Is it better to make money on one trade, or is it better to focus on trades that have a long-term probability, right? Probabilities are the way to go when it comes to trading because, just like playing a hand of poker, you're not going to take one trade, right? Just like you want to double down on the pot if you get a good hand of poker, high probability hand of poker, high probability trade, those are the ones you want. Right? You want to fold or skip in trading, right? Skip the ones that don't have that probability, regardless of whether or not it's a winner or a loser. Anyways, at this point now, we know that sell is not a very highly probable trade, is it? We also know stops now for those counter trend sellers are sitting right overhead. And what are the stops? The stops are fuel, right? They're gasoline. They're rocket fuel for those buyers. And so now, once we get a nice strong signal here, we can buy right into those stop losses. And usually this will be some sort of measured move, right? Big target overhead. So back to my chart right now. I always hate to keep you guys at the chart right now because, theory is only so good. You've got to be able to apply it to the market. So there is my channel, if you want to call it that, right? It's a flag. We go up, one leg, two leg, three leg. There's my trend line now. What I really want here now is I want to get underneath. I want that moving average coming over, and that now gives me that setup I was talking about earlier. That breakout pullback failure. We can buy, catch those sellers, right? Again, you know what's going to happen, right? You got that gap right there. That gap is on every rookie's mind. Okay, anytime I have a gap on a chart, I get 1,000, maybe not 1,000, I get a dozen emails saying, when do you think, how do you want to trade the gap? And the answer is we don't trade the gap. The gap is a target once the market turns bearish. But there's no way I'm going to be starting to take positions right now, trying to sell in this razor, right, this hot bull market right now. The last thing I'm going to do now is try to pick a top on this just because there's a gap. As I might remind you, that gap from last weekend is still open. Okay, it doesn't mean it can't get down there, but I can't trade that way. But I can almost guarantee you that if we do get a run lower, a lot of sellers are going to think that gap's getting filled. They're going to try to sell that pullback. Then, as we go higher here, right, what I really want is get down, mark up now, mark up now that high, get up, trap high. Remember, the trap is so important because you've got to get those sellers roped into it. Okay, if it just runs up and kind of goes up and over, it's not going to work as well. You want it up, get a trap, get those bears to sell it down. The moving average now should be right there, and we're buying into it from there, right? So the failure below it, the breakout pullback above it. But again, make sure you get that trap high. That trap is the key. That trap is the key. Now, there is potential. This may end up, right? We may end up getting that failure down here, but it may end up just running, into a range. If we do get a range on this, the plan is just like a range-bound market. So if this thing ends up going, if it ends up doing that range dance here, right, on the inside, what do? We look for breakout failures. We know the market's bullish overall. We wait for that move lower. Again, let those rookies, let those unprepared traders, let them try to get that gap filled, right? Get that moving average coming over, get those, right? Get those failures and buy it right back up from there, okay? Just because the gap's underneath me will not mean I need to be a seller. I want to make that very, very clear. Now, also, too, it's also very important, remember, a triangle. If we do get those two trend lines coming together, these almost always result in big jumps, right? Big jumps. So what if we do get a triangle here? What if we get the triangle? What will be the part, right? How do you trade it? If we get that triangle and it gives you that big jump down, remember, momentum's a concern now. It's one try for the bears, two try for the bears, and back up from there. Right? Remember that pattern? What was that pattern called again? It's called a nested pattern, right? Why? Because it's such a strong move down. Again, it's a range. Assuming we go into a range here, strong move down, 1, 2, back up into that range, right? What if it's the opposite happens, though? What if it runs, right? What if we get that range? What if we get that range here? And again, we get to the end of the range and it breaks out. What can we do there? Two patterns. Ready? Two patterns. One is a 1, 2, 3 breakout. Mark the high, mark the low, buy the pullback to the low of that hidden channel. You'll see a lot of examples of those breakout setups inside that free course I mentioned before, or a 2-try breakout. Strong move up. Because of that high being up there, I want to see a trap low. 1 try, 2 try, trap, and go. This is called a 2-try breakout pattern. It requires a very strong break higher. Okay, that strong break higher just creates a little FOMO. That's all. It creates that sense of urgency. I don't want to buy high. I will buy though underneath that second push lower. Right? Let the profit takers come in first. Let the short sellers try to sell it right from there. Once I get one try, two try, trap high, and we get that rally through because all those stops are sitting right overhead. We need those stops though. We need those sellers that second try to try running it higher from there, right? What's a reversal look like? Reversal, 1, strong move down. 2, pull back to the moving average. 3, jump off the moving average. Great, now we're bearish. Now I can be a seller. Mark the low, find the trend line, find the channel, sell the high. 1, 2, 3 breakout, or in this case, a 1, 2, 3 reversal into a hidden channel pullback. Okay, where's my target as we try to go lower? The target as we go lower, you'll see it's pretty easy here. We get the 3054 area, 3052. That's an easy target as we go lower, right? And then, of course, as we go down from there, there's that big low we talked about at 30 and a quarter. Really, 30 and a quarter, 30, this whole 30-30 area, much like on oil, we got that big old range down there. I would imagine 30-55, 30-50 area, but if we can get breaking through it here this week, 30-35, 30-30 is going to be an easy area to collapse back down into. If we go higher here, there is absolutely a chance for another leg higher, right? 1, 2, 3, breakout, mark the high, mark the low, buy that low, right, on the way up to where? Big round number? Yes, please. 3,100 absolutely is on our radar and just so happens to be a measured move at 3,101 and change, right? 3,100 is lucky number for the buyers. We'll see if they can get it. I've got my eyes on a couple key patterns here on the S&P, and now you're ready for tomorrow's trading session. How about some Nasdaq? Now, Nasdaq's the easy bunch in the group. Nasdaq's a piece of cake. We already know a lot of this stuff, right? What do we know right now? We know the market's bullish. We know it's very bullish. Why do I say that? No, not because we're making higher highs and higher lows, because we went up to that measured move, and every time it pulls back, those buyers, they just keep reloading the clip, right? Bring it back down, buy some more. Now, eventually, all the buyers who are piled on this level around 8,200, the big round number, eventually they will break. Right, they'll break down. Right? There's only so many bullets in the gun around that 8,200. Eventually, you will get that pullback. Okay, that's what we're looking for here. We're trying to get a nice risk-reward ratio. If I buy here, I can't really risk small to earn large. But if I can get a deep pullback, yeah, now I can risk small and I can get a much bigger reward. Which would you rather trade? Would you rather risk small to earn small, or would you rather risk small to earn large? I can pretty much assume what you're going to say right now. And for that reason, that's why those trades that risk small to earn large, that's why those are much more reliable trades. Right? It all goes back to probabilities. Sure, right? These small risk, small reward trades, yeah, I mean, they'll easily be winners once in a while. But if you were to take 100 of those trades, right, you're probably going to be about 45 to 50%, right? On the flip side, you find a chance to buy underneath a range, risk small, earn large. Everybody wants that trade. Everybody wants that trade. And so if you can stay disciplined and don't think it's a bear reversal, buy right into that failure, right? If you're mentally and technically ready for that pullback. Again, a lot of times what happens is a market pulls back and people just abandon the entire plan, or they have no plan. Like I used to trade, right? When I saw a big move down, I was like, oh, sell the 61.8, right? Isn't that what everybody does, right? But the problem is that's probably not going to work. It's probably going to fail. And it wasn't until I finally started to realize, by working with a coach, is what helped me, right? I finally began to realize, okay, I need to be mentally ready for this before it happens. Because you know what happens, right? It comes out of nowhere. And then before long, right, for some crazy reason, oops, I got short, right? It's that fast. And if you haven't struggled with that, consider yourself very, very lucky, right? For a lot of traders, though, they focus on, they're so zoomed in like this, they can't see the bigger picture, right? The bigger picture is if we get a deep pullback, buyers are drooling over that because they can risk small to earn large. So we know it's a range, right? We know it's bullish. We want to buy underneath it. What I really don't know right now, though, is do we get a pullback now? And if we do, can I use that typical failure, right? You know what I mean? Get those bears to think this market's reversed. It's not a very deep pullback, right? At this point, you're battling rookies, right? You're not battling against professionals at this point, right? They're not going to put up much of a fight with their stops on this. They, and again, do not take this personally, but I'm saying that as a group, rookie traders do what? They trade small accounts and they use tight stops. And I know this because that's what I used to do. Very small stops, counter trend trades, small account. I wasn't able to defend myself like a bigger trader would. My stop would go right above that high, right? And I'd just get stopped out left and right because I was constantly being, enticed into those reversals, right? And that's an easy failure for you now that you know better to capitalize on, okay? But what if it sits here quietly for a while and then we make a real big run, right? I still got that trend line I'm watching. I've still got that hidden channel I'm watching. Who knows if this hidden channel will come into play tomorrow, but that's a really nice area down there, isn't it? It really is. But think about it, right? If we just run lower now, that's going to be just like oil, right? That'll be just like oil. So we know we've got that range. If we sit for a while here, then we get some shot going lower. Yeah, see, now that momentum's way too much. I want to be a buyer, but now you're going to see more professionals take that trade short, and the people who do sell it, they're not going to give up so easily, right? They'll try once, maybe at a 38.2 pullback. They'll try twice at a 50% pullback, right? Now you've got the aggressive traders in, you got the rookies in, you got the more experienced rookies, right? I still don't think professionals would sell that just yet. But at the same time, though, now we know where their pain is. We're trying to buy off support. There's no doubt about that. It's a bull market, but we're trying to absorb that bearish momentum because the only way that you're going to be able to use a small stop loss, okay? I assume if you're watching right now, your goal is to risk small to earn large. If you want to use a small stop loss, you can't be lazy with your entries. You got to be very, very disciplined and time your entries correctly. Timing is everything when it comes to short-term trading. It is, right? Professional traders don't pick tops and bottoms. They wait for that time where that momentum is dried up and they hit it. Okay? It's going to feel very bearish when it pulls back like that. That's the goal. The goal is let them try once, let them try twice, and buy as we go back up into that trading range. Now, question for you. Measured move overhead. How do we sell a bull market? Is that possible? Oh, absolutely it is. We just need to make sure we use the prime setup for it. What's the best setup for a reversal? Or what's the best way to sell in a bull market? First of all, you want to make sure you incorporate some level of resistance. So the high of day, the measured move, right, is definitely on my radar. We want to go up into that area of resistance. At this point now, the most reliable pattern is called a crown reversal. I want to see a pullback once. That pullback will not retest the high and it will go to a lower low. At this point now the sellers start creeping in, right? Now you start seeing the bears start to sniff around this tree, right? Now we go up again. Buyers now try to buy, a lot of buyers will try to buy that breakout, right? Calling it like a inverted head and shoulders or some other garbage, right? You're buying it right into that high though. Okay, again, I'm not saying this is a bear market. I'm saying the bulls now, they've got to get that one, that two, trap high, and then over from there. This is called a crown reversal. Now, we talked about this earlier on oil, but oils was the buy underneath, right? It was the buy because it's a bull market, right? We're trying to get that deep pullback and buy up from there. In this case, I want to sell off that top, okay? But to be a seller on this, I've got to be using a more disciplined, a more patient pattern. I've got to give the buyers the benefit of the doubt, and I have to look for a place. This is the key. Look for a place where only the rookie buyers are going to be getting in and sell there, right? Because remember, the professionals, the more experienced, the bigger position traders, they're buying on pullbacks, right? It's the breakout traders, which we assume are rookies with small account sizes, tight stops. That's where you can do some damage, right? You want to sell as high as you can, but you also want to sell where most of the big money who will be waiting for it down here. What happens is you've almost got this kind of get out of jail free area right there, where if you get a real nice signal on it, you can almost always get that move back down to retest that low. From there, take that quick profit. If they hold it and go from there, at least you got your first target on it. Quick profit here, and then leave that runner to the pendulum swing on the other side, right? The pendulum swing, it'd be a crown reversal, sell off the high, target at the low of the second move, target at the pendulum swing, right, on the opposite side of that trading range. Or how do we get a breakout? Yeah, 1, 2, 3 breakouts. I do trade breakouts, but I don't trade breakout pullbacks, and I definitely don't try to predict breakouts. I wait for 1, strong move up, 2, pull back to the moving average, 3, jump off the moving average. That is the key. Once you've got that 1, 2, 3, now you know where the sweet spot is, and now you can buy on that pullback. Where's my next target as we go higher here? Oh my goodness, it's going to be a big one. Right? It's going to be a big one. At this point now, that next leg higher is all the way up around that 83.10, 83.20 area as we go higher. Right now, that seems to be completely unrealistic when you look back in time how far we have come. Right? But, hey, tomorrow morning or overnight, we hear from President Xi in China. He could easily light this thing on fire and make this thing give us one more leg here. He could also knock this thing down a couple notches, and we've got to dig ourselves with that nested failure pattern, right, out from the rubble on that as well. So he could really move things around here, and depending on what he says. Again, all these patterns, you can see hundreds of examples of how we apply these patterns on our favorite markets. Grab that free course in the upper right-hand corner, or that big red button for you right below the video tonight on our trading blog. Let's wrap this party up here on the yellow metal. We've talked a lot about ranges. We just talked about the pendulum swing. Here on the gold or on the Nasdaq. We've got one setting up here right now on the gold. Let's take a look at what we know on gold right now. We know that gold, as I mentioned before, while the rest of the world was partying like it's 2020 already this morning and last week, right? Gold seems to be holding steady. Now, wouldn't you think if the world was all peachy keen and everything was cool, don't you think that gold be tumbling? I think it would, right? I think it would definitely be dropping. This is like that check engine light coming on, right? You haven't quite felt any stuttering in the engine. You're not feeling any loosey-goosey transmission, right? Everything seems to be working, but all of a sudden, that little dim light in the corner keeps on flashing every once in a while, and you're going, oh boy, something might be wrong under the hood. That's what gold seems to want to tell us right now, right? Now, all we know is it's a big clue. This may end up, right, really exploding here in one direction or the other here, because something's going to give here right now. With the markets moving so well up, right, keep going higher here, and gold still holding, it doesn't make any sense, right? It appears to be a big fundamental divergence clue here on the gold. Maybe you can enlighten me. Maybe you got some ideas on why this is happening. I'd love to hear from you in the comment section below this video. As of right now, we know the market is bullish. We know we're inside of a trading range. We know that ranges, what do they tell us? Buy low, sell high. We know we have a bull bias, so we definitely want to be buying low, and buying low. We want to be buying underneath that range and buying off of support levels. So looking at support levels right now, I've got my buy zones below, my resistance zones, right, my sell zones overhead. I've got some expanding triangles, which are really one of my favorite tools when it comes to range-bound markets, because as you saw last week on the S&P, it just called tops and bottoms left and right. We've got this range now, and it's really giving us a lot of guidance up around that pendulum swing. And keep in mind, right, a range is what? It's a balanced market, right? Think of a range as like a big old magnet, right in the middle of that chart, the amount of the move underneath the range is oftentimes symmetrical or equal to the amount of the move back on the other side of that range. So think about how that can play out right now. Also, right, think about that strong move down. What does a strong move down tell us? We're going to probably get another leg. You're exactly right. So even though I do want to be a buyer on this, right? Even though I do want to be a buyer underneath this trading range, that strong move down really spooks me here. And what type of pattern works best to buy after a very strong move down? Yes, a nested failure pattern. And what I'm looking for here on gold to be a buyer on this right now, I want to be a buyer, but I've got to respect that momentum. I also don't want to trade the middle, do I? Right? Nothing good happens after midnight, and hell no, nothing good happens inside the trading ranges. Stay out of the range, right? Mama always told me, don't fiddle in the middle, Joe. Stay out of that trading range. What I'd like to do is to find a way to buy underneath the range is use that crown reversal, right? That crown reversal pattern and get that trap now, okay, underneath that low. That would be the absolute cherry on top ideal entry pattern right now for those buyers, right? So what we'll do is mark up that prior swing at that 08.8, mark up that prior swing at the 08.8. This becomes kind of your pseudo battle zone here. One big leg down, bears try once, bears will try twice. This allows us now to buy in a support area, trap low. It allows me to risk small, to earn large. It allows me to stay away from the middle. And you'll notice we get a lot of patterns like that, right? For example, back here, strong move up, one try, two try, trap high, back down in, right? We've seen a bunch of them here on the gold, and now that you know what they look like, you'll be able to look back in time and you can see these things happen quite a bit around the edges of these trading ranges. Now, another option, a little more aggressive option here, would be to use a hidden channel. So as we go higher here, I mark up that low, I bring that, right, that trend line down. Maybe I don't get the full trap, but maybe I get that pull back, nice strong signal candle there. That wouldn't be horrible. That still gives me the ability, again, to risk small, right, to earn large. But that's about all I can do. I definitely don't want to be too aggressive as we get back into that range. Speaking of which, if we do end up back inside that range, what can I do at this point? Is there anything else I can do at this point? Really, you want to sit on hands and try to get back underneath that range. Remember, those rookie traders who will get roped into taking that breakout pullback, I can then make my job a whole lot easier and buy right into those stop losses. But what if the market just jumps, right? What if the you know what hits the you know where and this thing just runs as we're going higher? There are two basic patterns that you want to look for. One of them is that strong run up, right? 1, 2, 3 reversal. Find that hidden channel and buy that pullback on the way up. Now, make no mistake about this. I need to have a very strong move going higher here in order for me to justify being a buyer off the low of that channel. Another pattern would be a strong move up with a 1, 2 trap low and finishing off that pendulum swing. Those are very, very, again, they begin with very aggressive moves here. So if I can get a 1, 2, 3 jump higher, I can mark that high, mark that low, and I can use that momentum because anytime we get a strong move in one direction, what do we usually get? We usually get a follow-up leg. I can use that momentum now to finish off that pendulum swing. Right? The amount of the move underneath, the amount of the move overhead, or strong move up, 1 try for the bears, 2 try for the bears. You definitely want that trap because it is a range. Trap low, we call this a 2 try breakout pattern. It is a great, great pattern, but again, it requires a very aggressive move. What if we go back into the range and we sit here for a while, then we jump up? Well, at that point, there's nothing new here. It's a range, right, with a bull bias, but that momentum is killed. So at this point now, we'll wait for it to go up. We'll wait for those buyers now to try to buy the pullback, and we'll sell back into that range. So the only way that I can really buy this market above that range is if we skip all of this, right? If we run, that's it. Because if we go sideways inside here, that pretty much negates any momentum. And that means that as we go higher, right, as we push higher here, now the buyers, there's no sense of urgency here, right? Let those buyers try to buy the pullback, and we'll sell back down into that trading range. And we'll keep doing it, right? Buy low, sell high, keep focusing on failures. Now, again, guys, I've talked a lot about the failure patterns, the nested failures, the breakout patterns, the 2-try breakouts, the 1, 2, 3 breakouts. Make sure you grab that free course in the upper right-hand corner. And I'll tell you right now, what would be even better decision is come out and do it with me tomorrow in our trade room. You know, if you're on the website right now, the advanced membership includes all access passes to our trade room, all of our video classes, ongoing support. There's a video on the homepage there that will walk you right through it. If you're on YouTube right now, check the description of the YouTube video. That will have a link in there to get registered for tomorrow morning's trading session. Or if you're on the blog right now at Sideways Markets, just scroll right down below this video, hit the big blue button, and get registered there. So very, very easy to find the registration tool here to get ready for tomorrow morning. We open up our trade room every morning, Monday through Friday at 8 o'clock Eastern Time, and I want to see you there with me. At the very least, though, if membership is not quite right for you yet, make sure you grab the free trial. The free trial includes our free pass to our trade room, our free trading class, and hundreds of examples of how we use our favorite setups on our favorite futures markets. If you have any questions, don't be afraid to call that toll-free phone number right next to my ugly mug. Use that live support tool in the lower right-hand corner, or drop me a question in the comment section below. Whatever you do, though, make sure you enjoy the rest of your evening. Catch up on that sleep, right? This sleep cycle will catch you up to the next couple days here if you're in the U.S. So stay hydrated, stay hydrated, and stay ready for tomorrow. Tomorrow's going to be a great day in our trade room. Hope I'll see you there with me. In the meantime, have a great rest of your evening. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.